Just to give you a background about the CAMS, so we've been 30 years in running, primarily in the RTA segment, but primarily we are a fintech-driven company wherein we develop a lot of platforms for us, for our clients, to service our clients. So the biggest of the platform is the one which has been developed to service the mutual fund industry, wherein we are servicing around 18 AMCs, more than 70% market share. Similarly, we have presence in multiple business verticals that includes AIFs, PMSs, and other business lines. So under AIF, PMSs also, we are extending a lot of services that includes the RTA. When I mention RTA, I mean the client onboarding and the investor services. And along with that, we do a lot of regulatory compliances, CKYC, KRA, UBO, FATCA, which Ravi will walk you through. And to add to it, we have the accounting services, and we have a lot of digital platforms. So we have a platform for onboarding your customers end-to-end digitally without any paperwork. So this is a platform which is available for AIF for both individual as well as non-individual investors, wherein without any paperwork you can end-to-end onboard the investors. Similarly, we have platforms for other, we have investor services platform, we have a platform for investors to log in, view their fund details, generate their statement of holding, place in request, service request, so on and so forth. And we also have a CRM for the investment manager. It's like a mini RT on a laptop, wherein you can view the full reports for the investors and other compliance related. So that was a brief background. I'll hand over to Ravi to walk you through the details.
So CAMS is into RTA business, as Abhishek explained, for more than about 3 decades, but into business of AIF, even before AIF come into place. So we were into the space since 2007 during venture capital days. So we started off this vertical during 2007 and servicing venture capital funds. So where, in fact, as we have done some benchmarking for mutual fund in VCFs also, those days, probably you might be aware, there were only agreements. There was not even an application form, which were collected from the investors. So in fact, we find it difficult and make it as a practice to bring into those VCFs. And since 2007 to 2012, so we were handling many of the VCFs who gone into retail space, especially people like Milestone, Piramal, whose investor base, we cannot imagine. Milestone's investor base was somewhere around 15,000 investors. So likewise for Piramal also. So those investor base we were able to manage with the experience that we have gained out of mutual fund. So then when these AIF regulations come into place, in fact there was a feel in the market, right? So the AIF, the commitment has been increased. In fact, during VCF days, it is only 5 lakhs. Of course, many of the funds follow 25 lakhs, but as per regulation, it is only 5 lakh commitment. When it is enhanced to 1 crore, we were thinking, say, how industry will grow, the retail investors may not come, the industry may not reach, but those thinking proved to be wrong. So now, you know, if the space, it is growing up, phenomenal. Of course, we also grown along with the industry. So we have, along with RTA service, we started our fund accounting since AIF come into place. And we service close to 130, 140 logos, so meaning AMCs, and around 300 plus schemes. And accounting alone, maybe around 90 to 100 schemes. That's our current strength here, and we keep winning mandates each month. Yeah. So when it comes to RTA role for an AIF, so this is the general, if you could see, these are the activity that the fund manager has to undertake. For example, if you could see, right, from investments, fundraise, product design and structuring. So our role is limited. So if you see that blue color shaded, our RTA role is there. So rest of the other things, of course, the fund managers or customers, they have to take care. So here, if you could see, even on sales marketing, partly we will support. How do we support? Like pre-launch support. So before launching the scheme, So what are the steps the investment manager has to undertake? See, approaching people like Deloitte or any tax consultant and starting of making the fund structure is one point. Then before going into operationalize, what are the end things they have to do? They have to get CERSI registration done. Then they have to do KRA registration done. There was again a different opinion. Is it required? When CKYC number is there, why KRA? But regulator said yes, both are required. There is no regulation that KRA is not required. Consequent to CKYC come into place. It is not so. Again, there is in industry some kind of a understanding. For example, CERSI registration. The fund has to register with this agency as an intermediary. Then registering the investor for KYC compliance is next. So often we find it difficult to convince, especially the new players who start the business. I am registering it, then the investor is already CKYC verified, the investor has CKYC number, KRA verified. Why should I register? The investor has already got, but the intermediary has to register with both these agencies. We support them, that is where the pre-launch support comes. Then this kind of knowledge sharing. So even we go through the fund documents, PPM and contribution agreements in the operational angle. Many a time, the fund documents, of course, it talks about management fee and its revenue, all those things. But if you look at the operational angle, how the units are allotted, is it net of setup fee or gross of setup fee, or so those things usually may not be more clear in the documents. Likewise, after allotment also, how the income in case of CAT 1 and 2, how the income will get allocated. Is it on contribution basis or commitment basis or net contribution? So there are many parameters the fund manager has a discretionary power. But so if it is clearly spelled out in the document, it may not create any noise from the investors. So that is where our support on pre-launch support and knowledge sharing. And of course, we have client call center. So wherein in order to avoid misselling. So this is one feature which we have even provided to some of our clients, especially some of the distributors who opt for it. So while the client is onboarded, the investors are called by our call center agents and it is on recorded line. The verbiage and what is the communication to be shared to the investor, those things are agreed between CAMS and the fund managers. And it is on recorded lines, we get their okay, and then only the investors, the payment will get banked or money will get transferred and the units will get allotted. So that in future the investors cannot come back and raise issue, concern, say it is a missell. I was told within 5 years it will get double, those kind of things, right? So that is why, whoever is willing for that kind of support we provide. Then of course under operations, investor onboarding, transaction processing and record keeping, KYC service, reports and fund reconciliation. So these are all our day in day out work where the fund managers need not focus their attention on that. So in fact, when the discussion is started off, it was said like the fund manager may have to take care of the investments and investors. So our view is no, investors we will take care. Whatever the queries, whatever the communication to be sent, and then investor servicing, that burden will be taken care by CAMS. You fund manager can focus their complete attention on investments and making money out of it. So there I already touched upon the KYC service. So for the investors, once intermediary registration, then the investors KYC registrations. So even for KYC, KRA also, it is not enough that if the investor has KRA verified and CKYC number is there. The fund has to register, the fund has to fetch the information from KRA or CKYC and ensure that the same is available in the application submitted to the fund. So then only the KYC process ends. So otherwise, if the investor already KRA verified, we have KYC number, But if they give a different details in the application form, then it's not right as per regulation. So we have to fetch those information from both KR and CKYC and ensure that this data is matching. That we will take care. Then of course, host of reports, the collection MIS and drawdown MIS, default MIS, alerts to the investors, the due date of drawdown, and reconciliation of contribution, subscription reconciliations. All those things will be part of our RTA services. Then, as I said, statements and alerts. Then, yeah. So this Abhishek has touched upon online and digital solutions. So we have a InnoStar online portal through which the InnoStar can buy PAN-based access. He can see multiple folios, account statements, and he can see the communications, what is sent to them. So this is one of the area where the HNIs will come back quite often. Very rarely they keep, even though we send hard copies or soft copies to the mail, SMS, link, whatever it is, when they require, they don't have time to go, or they don't have the bandwidth to go and check their mailbox and whether the communication is there already or not. So when they year and year or at the time of tax filing, they would definitely come back, give me the statement for the financial year, what is the tax statement that you have given, what is the Form 64C. So all those things are available for the investor. He can just log in and download those, whatever the communication sent to the investor and the SOAs. So which is an online portal made available for the investor. Then of course the brokerage. So when the contributions are mobilized through a broker, so hitherto, so maybe few years before, it was only upfront brokerage, majorly for VCFs and AIFs. It is only upfront on commitment. Now the scenario changed. So now there are a lot of trial-based fee. Unlike mutual fund, there are more complex structures. In fact, here the structures would be almost like at investor level. So they have a different treatment based on the setup fee that is charged onto the investor. Essentially, that setup fee is used by the AMCs or fund managers to pay the brokerage by them. So any complex brokerage process we undertake, we provide brokerage reports, all those stuff. Then comes the fund accounting part. So which is essentially the bookkeeping, investment accounting, NAV calculations, then investor level accounting. Of course, finally the audit support. So in accounting services, what we provide is, it is almost an investor level accounting. Why I said is, so especially for a debt fund. So there might be a periodical distributions. Each quarter we pay the distribution to them, we deduct the TDS, we pay the TDS, and we go to the extent of filing TDS return on your behalf. Even the TDS returns will be filed by us. Okay. So that is where again the capital account statement generations. So what is the contribution received, how it is utilized, right? Whether it is on investment, how much, towards expenses, how much. That capital account statement also we will provide. NAV calculation, in a way, it has gone to the extent now, almost again, investor level now. Usually, most of the system will support at class level, right? But when it comes to investor level, why at investor level? The setup fee, even within the same class, differs. There are some side letters executed by the fund managers. Even within the same class, the management fee differs for one investor and other investor. So if we have to handle all those things, ideally we should have a investor level accounting. So it is not only on accounting part. Our RTA side also, we have a system where we can upload investor level NAV, and the investor level valuation and investor level SOA will be carrying the NAV of the investor. Unlike mutual fund, it is not the NAV of the fund or NAV of the scheme. It is the NAV of the investor. So that feature is there at RTA. Even at fund accounting also, we can compute at investor level and provide. Then of course, then audit support and the Form 64C, Form 64D, all those things we prepare and share to the investor. Now, consequent to IT authorities, they have preponed the data filing of 64D. Previously it was November, now it is June. The reason being, once 64D is uploaded, like Form 26 says, the investor can download Form 64C. Because against each investor they can download, or the investment manager can download and send. So those filing, preparing the 64D and sharing to the fund manager in the uploadable format will be taken care by the fund accounting team of CAMS. Then the audit support, so where the book financials, closure, and whatever the audit queries raised, all those queries are addressed by providing required calculations or copy of images of the documents of the investor. So we take care of all those activities. Stamp duty it may look very simple. So it is at the time of issue of units, we have to collect stamp duty and pay to the concerned state. In mutual fund space, it is very straightforward. So if you invest 10,000, we don't get unit allotted for 10,000. Net of stamp duty only we will get allotted. But whereas in AIF space, each fund manager has a different view. See, for an HNI who pays 1 crore or 5 crore, why should we see, it is uniform across all the investors. So stamp duty doesn't change for this investor or that investor. So the fund manager takes a call, yes, the fund absorbs the cost. It is part of our operating expenses. So the investors' units are to be allotted in full. So we have developed a system wherein there is an option, inclusive or exclusive, basis which the unit will be allotted. Then again, unlike mutual fund here, for transfer, the stamp duty charging is different. It is 0.015%. For fresh units, it is 0.005%. For transfers, based on the transaction types, again, we have made the systemic provision to handle the stamp duty. Then one more issue on transfer. See, as per stamp duty regulations issued for issue of units, the transfer can happen on a consideration amount. The stamp duty to be charged on the consideration amount. See, if the transfer is happened from A to B, right? See, the stamp duty, as far as the fund is concerned, there is no financial transaction happen within the fund. Same contribution remains the same. Instead of A, it is going to be with B. But when the transfer happens, it is between the both individuals, A and B, where they may agree for a different consideration amount on which only the stamp duty to be charged. We have the systemic provision also built. Consequent to the stamp duty regulation comes into place. So that is where, see, based on the regulatory requirement, whatever the changes required, we tweaked and built the requirement in our RTA system and handle it. Then comes the regulatory reports. See, what are the regulatory reports we provide? So one, under accounting, we take care of TDS return filing also. So when it comes to RTA side, the SEBI quarterly report we prepare and share to you in the uploadable format, which can be uploaded by you. Then we share you the INVI report, wherever units are allotted for RBI, NRI investors. For RBI, so those reports are prepared and shared to you. Then at the year end, FLA report is provided, so as to file the same with RBI. So it is enough if the fund manager is just to file. We prepare in the uploadable format and share to them. Then, of course, I touched upon Form 64C and D. Then FATCA CRS, which is Form 61B, which is also prepared and shared to you in uploadable format, which you can just upload into IT site. In fact, we support the new entrants and new fund managers in registering with FATCA, in creating their GIN number. So we support them. Then the PMLA service. We have a separate compliance team. So through them, we take care of the world check screening, and through that, whatever is there any hit, accordingly it will be taken up with the investment manager, and that is also taken care at CAMS end.